Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today's guest is Aaron Goldman, and he's managing partner over at Level Up Ventures. Aaron, welcome to the show.
Adam, thanks for having me.
So, Aaron, I know that you were referred over to us from Brandon, who's been on the show before, and he tells me that you're definitely not an entrepreneur's entrepreneur. Like, you have never been in the entrepreneurship world, right?
Yes, never.
No, give us that background, man. No, it's awesome. I've been telling Brandon I wanted you on the show. Give us your background briefly so that we can get into this. We're going to talk, and for everybody listening, we're going to get into scaling businesses. We're going to get into some of the work they're doing over at Level Up Ventures and really just the current state of the market in the VC world. So give us that background, though.
Yes, absolutely. So, I've been an entrepreneur for quite a while. I started my first company, which I dubbed King Sports and Entertainment when I was 8 years old in elementary school. Grew that thing to, a business with dozens of volunteers under my belt, helping get a lot of stuff done there really efficiently and cost effectively. I exited that business at the end of fifth grade, and I've always loved technology. I've been a big programmer, very shortly after that when I started to learn how to program at that time. And I said, okay, now have these skills. I want to actually do something with them, which I think is always important. And so seventh grade came along. I was 12 years old. I've always loved debating, been a big debater. And I founded debateisland.com because there was no place to casually debate online. So why not make it? That's what Debate Island started as, a casual online debate platform, the first of its kind. You can't really go on social media or Reddit for that because things are going to get very out of hand. It's not built for debate. And so the platform is specific for that. And then we really expanded just tremendously pretty quickly in the first 2 years, grew it to millions of page views annually, a lot of users. And then
wow. And how old were you when that took place? Because how old were you roughly?
Yeah, so I was 12 when I founded it. And, the growth really happened primarily when I was obviously middle school and high school.
Wow, that's absolutely amazing. I'm like, I can't, how many people are listening to this right now? Like, I want my current website to be millions of. He's doing this as a teenager. Come on, man. Go ahead. Continue, please.
No, it's definitely, it takes a lot of hard work, but if you love it, you love it. I mean, it's not even a job. It's just so much fun. I would program during school. I would, do all the business stuff during school. I would do it after school. I was working crazy hours, but I loved it. I wouldn't want to do anything else. It's the most fun thing to me even now, really working on, the things that I work on in the business and now investment world. And so, took it into the AI world, created a bunch of really cool products that were really first of its kind. We called our suite of AI products Deborah AI. Effectively, can do anything from predicting the winners of online debates on Debate Island with extremely high accuracy, providing incredible analytics and other things to help people debate better and become better critical thinkers and writers. And then we really went to the ed tech world. So we became the largest ed tech solution provider for debate, globally, used in over 70 countries as well. We were indirectly endorsed by the United Kingdom Department of Education, trusted by Microsoft, Pearson, and others as well in that space. So, yeah, it was really an incredible journey. I left Debate Island last year, transitioned leadership there, founded a lot of other companies like the American Post in the media world, and Best Deal Wins, which was not successful, which always happens, and it's totally normal. And so that taught me a lot of lessons as well. Founded Lost Cry as well, which is basically a repository for people to post their ancestor stories of hardship from the Holocaust to immigration to others, which was really a testament to the strength of my great-grandmother, who's now 98 years old, and she was a Holocaust survivor. She gave me her diary entries, and I said, look, this has to be online. There are probably many others who have a similar story that we want to preserve. So did a lot of stuff in the startup world, and I've always loved investing. I've been an investor since I was also very young, doing investment analysis for public equities and startups since I was in school for fun. And now I'm in the VC side of things, which I'm really, really loving.
Yeah. And so that's why I'm excited to talk to you and have you on the show to kind of get into like just the current state of what's going on for startups and scaling, and like the VC world's not doing all that great right this exact moment. I mean, talk to me about what you're seeing.
Yeah, we have a really, really good grasp on the startup ecosystem because we see about 5,000 deals come in our pipeline a year.
Ooh, that's a lot of deals.
It's a lot. Yeah, it's a lot of startups to review, which we really love doing. And so overall, right now, traction is one of the most important things when we're looking at a startup, right? And that's the case with most VCs and institutional investors because it will decrease your risk when you're writing a check or taking on a company in your accelerator or incubator as well. And so right now, the name of the game is obviously high returns with lower risks. That's where VC is at, and that's why traction is really standing up as a critical point to have as a startup when you're applying for funding.
Talk a little bit about Level Up Venture, just for some context for the listeners. Is there specific? You said 5,000 deals. Is there industries that you're looking at versus other sectors? I mean, give us a little bit of a flavor there.
Yeah. We're generally pretty industry agnostic, but I'll give some background on Level Up. I mean, I think it's extremely unique, which is why I love our firm so much. You know, both Brandon and I come from entrepreneurial backgrounds, and so that gives us a very unique perspective. Our team has over 25 exits and IPOs combined, and we've raised $150 million to date for startups and all that good stuff. And so we saw all of that stuff in terms of how to actually operate and scale a venture. And then Brandon went on to co-found Quay Capital, which is now Forbes ranked T-stage fund, over 275 investments today. So really became very successful, and then went on to found Level Up, where I was so lucky to join in last year and grow it. In terms of now we have an accelerators and incubators arm, and the fund is just so much more robust as well. We're doing a lot of Series A and Series B things. But our whole thing is we want to add a ton of value to your startup. And if we can't, we're not going to invest. So we come in the mature seed stage, companies that have had, really meaningful traction, have been in market for at least 3 months. They have substantial month-over-month growth. And we know that we can come in there, grow their revenue, grow their user base, grow everything tremendously, and then get them to their Series A in the next, hopefully 12 to 14 months, really decreasing, again, that risk. Because when you have that timetable, the startups generally do better, and your investors have returns that are better, faster. And so that's our prime thesis across every industry except biotech, anything highly regulated, anything hardware related. And we're really looking to expand LP capital as well, right? Their value, especially in this environment. So we have our accelerators and incubators, which take a whole new approach as well. I absolutely despise accelerators. I hate them. I have never been part of one. It's just a waste of time, I think, for most founders. And that's why we created, which now is next to pre-launch for pre-launch companies, next to scale for post-launch companies. And our whole approach is we're a bespoke accelerator. There's nothing like this. We're taking your company from day one, when you have your MVP or when you've launched, getting your next round, whatever it really is, and through an individualized, highly strategic, and hands-on approach, I will work directly with you. My teams work directly with you every single week or every other week or more, depending what's necessary, to get you to that next level. Whether it's getting you to launch faster and better, it's getting you to scale with really great, much greater stats around you and a much more powerful company. And so far, in the past 7 months, we've seen amazing results. On average, companies have had 5x revenue growth within the 6 months joining our program. They've had 5x valuation growth, 25% ahead of schedule launches for pre-launch companies has been the name of the game for over 90% of our companies. And we're now approaching about $275 million across the firm in portfolio market, market caps. So really, really great results that we're seeing, which we're beyond excited about. It's a totally new approach to accelerating companies.
What do you look for in a founder? Like, you're seeing obviously a lot, the numbers, everything else, assume all things being considered with the product you're excited about or otherwise, like, what are you looking for in the founder and or the management team? Like, what makes it work?
Oh, that's the most important thing, because you could have a great idea, but if you're not a founder or you don't have a strong team that's very complementary to you, you're not going to really go anywhere most times. And so we want founders that have tremendous visions. They can really execute because of their grit, because of their ability to think out of the box and have operational expertise to really scale. And we don't care about their backgrounds in terms of education. We don't care about their age, because we've seen that, for example, Gen Z.
Well, of course, hold on, Aaron, wait a minute. Other people say we don't care about their age. Man, I would have put my money on you when you were 12. So you better not be ageist out there when you were killing them at 12, man.
Yeah, and that's an interesting lens,
Did you ever
right?
consider that that's why you don't care about their age?
It is in part where I've seen a lot of young entrepreneurs have done great things. I mean,
Yeah.
I never felt like I could do less than anyone else when I was, an entrepreneur out there either, right? So I don't want to be ageist or anything. I think there's a lot of bias in that actually with a lot of VCs.
Yeah.
So
Yeah.
our whole thing is like, look, Gen Z is so underlooked, for example. About, if you look historically, the same age group that Gen Z currently belongs to and will belong to for the next few years, over half of unicorns, billion-dollar plus companies, have been founded by that age group. Most companies that you think of, that are the huge companies, the Microsofts, were founded by people in their 20s. And so a lot of VCs look away from that, but we look towards it, we embrace it, and we say, look, we have a really great team that includes Gen Z, and we understand that market. We want to help you with that strategy to really stick within it. So we're really proud of that as well.
Yeah. I mean, I asked you the question from the VC standpoint in terms of what you look for in a founder. Let's kind of flip it. So what should a founder be looking at, either in a VC or anyone that they choose to accept investment from?
Yeah, you want a VC that will support you and not fight against you for the betterment of their dollars. Because ultimately they think that they're bettering their investors, but they're not. They're actually screwing them. Can
you give an example of that, like just in general? Like it doesn't have to be on a specific company that you're working on or whatever. It could be. I don't mean, it's up to you, but just an example just to put some like clarity on that.
Oh, absolutely. Absolutely. So a lot of VCs really look at companies where, okay, how can we get these guys to X point without caring about anything else and without adding value? All we really want to do is just get a board seat and then go and run with it. And that's not the right approach, because the problem is they could get to wherever they want to be, but they could have a lot of weaknesses and pain points that come up because of that, and their investors end up losing out. And most importantly,
so they could be winning and still lose, really. Yeah.
Exactly. They might think it's the best option, but it's not. So, for example, I've had many case scenarios with our portfolio companies where they're like, look, what should we do? Should we basically raise this money now, which would be great, I guess, because then their valuations go up and that's good for us? Or should we wait 6 months and get this and this done and then raise? And I'm like, look, I look at it so objectively. We should do what's best for your business. And so if I tell you, no, go out and raise 6 months, it's going to be a little bit of a delay, but you're going to have a much larger raise, in my opinion. You're going to be a more successful company and a happier founder, which is better for the company and our investors. That is much better. And so, again, I think everything is around helping startups and maximizing returns with equal importance, because they go hand in hand, and you're going to do both even more as you focus on each one.
That's a great point. And I think it's interesting because especially for those first time, founders, or let's just say, I've found at least, many founders, maybe they've been in business, maybe they bootstrapped in the past, and maybe they're thinking about going out there and, raising capital for the first time. And, they didn't have the traditional entrepreneurial background, but they finally have their hit or their idea that has some traction, right? After all those duds. And it can be a tricky thing, right? Like going the VC route and entering that world and thinking about who to make your partners in this. It's a very intimate thing, in my opinion.
Oh, definitely. It's really important because you're going to be working with these people or not, because it depends on VC, right? If you're a value-add focused fund, then you'll be working with us quite a bit. If you are
actually, that's a good point. Can you want to juxtapose that real quick? So value add versus another. There's other models. Like, you want to juxtapose that?
Yeah, absolutely. So, with us, we work with our fund companies on a bi-weekly or monthly basis to get them to that next level. That is very different from a lot of other other firms that are in VC, where they're just like, look, give us our investor updates. We want to see succeed, but give us your updates every 6 months. And if you need something, I'll try to help you. And the problem is that for their investors, right, they're not getting the most bang out of their buck, because your VC is not actually helping the company what they could and open up their expertise and community. So you're not getting as far as you could, and that just harms everyone. And that's why value orientation is so important. And I think that's where VC is going. Even if you look at the landscape, right? Accelerators, incubators, and venture studios are, about 2 decades ago, even 10, 15 years ago, that was not a big thing for VCs to have. Usually you were just a pure direct investment fund. Today, we're seeing that multiply every single year, where now more and more VC firms that used to just be funds are getting into the accelerator and incubator landscape because they see that that can extend LP capital dollars, and that can help create more fruitful companies where you're super involved because you've seen so many companies succeed and fail that you can guide the startups much, much better.
It's great. Well, I just have to say that Brandon was not wrong in introducing us. When I was interviewing Brandon's like, oh, Brandon, you got to talk to Aaron. Yeah, Brandon, you were right. You're right. Okay. Aaron's amazing. So that's good. Kicking our butts at 12 or 13 and like all this stuff. I'm like, what? This is amazing. That being said, Aaron, out of time for this particular episode. If somebody wants to, learn more about Level Up Ventures or follow your journey, how do they do that?
Yeah, absolutely. You can always, connect with me on LinkedIn, follow me on Instagram if you want to follow along with what we're working on. And if you want to, actually get involved with what we're working on, or you want to apply to be a portfolio company, please go ahead and reach out to Brandon or I, or apply or contact us on our website, levelup.vc. That's LVLUP, interesting spelling, which is a little bit innovative, .vc.
Amazing. And for everybody listening, we'll put obviously the info in the show notes so that you can just click on the buttons and head right on over. And speaking of the audience, if this is your first time with Mission Matters or engaging in an episode, and if you haven't hit that subscribe button yet, hey, this is a daily show. We're bringing you rock stars from business and industry each and every day. We don't want you to miss any of those episodes, so definitely hit that subscribe button. And if you're a long-term listener and haven't left that review yet, you already know my feelings and thoughts on that because you've heard this before. So just come on, go push the button, write that review.
I'm a subscriber, guys.
There we go. Come on. And Aaron, again, seriously, thanks so much for coming on the show. And it's been a pleasure working with you. So thank you for all you're doing for us and for the founders out there, man. So thank you.
Oh, absolutely, Adam. Thank you so much for having Brandon and I. It's been absolutely amazing.